Okay, hello everybody. Thank you again for joining us. We're going to get started here. My name is Brian Kearney. I'm a Business Development Manager for the Entrust Group. I run our office based in the Boston, Massachusetts area. And just wanted to thank everybody for joining us and get started on the presentation here. Today we're going to be discussing what kind of IRA is best for me and go through the various options that are out there that are offered by Entrust and give a brief overview about self-directed IRAs and some of the investment options that you all might have. If at any point during the presentation there's questions, feel free to type in the chat box on the lower left, and I will address those as I'm able. So getting started here. Just a brief background on the Entrust Group itself. Entrust is not an investment manager. We're an administrator for self-directed retirement plans. We facilitate individuals investing in alternative assets with their retirement money. We're a leader in the industry. We've been doing this for over 30 years. We have over 15,000 client accounts that we administer. Process anywhere from 12 to 16,000 client transactions on average every month, and we do run administration for over $2 billion in investor assets. So we're one of the largest providers of self-directed IRA plans out there. Entrust has a deep and knowledgeable staff. All of our eligible staff have earned the CISP designation and really have an expertise and background in retirement planning. We try to be educators in the marketplace, doing national continuing education programs, national and local in-person presentations, and of course, as you're all experiencing now, webinars. And we do have local offices throughout the country. Currently there's 8 regional offices, and in general we try to expand that by at least 1 or 2 offices every year. So we're growing at a strong pace. Before I get too far into the presentation, just want to read a brief disclaimer. As I mentioned at the beginning, Entrust is not an investment manager. We don't provide investment advice or endorse any particular products. All information in this presentation and materials are for educational purposes only. All parties are encouraged to consult with attorneys, accountants, and financial advisors before entering into any underlying investment that they're interested in. Now, to give a quick agenda for today's presentation, we're going to discuss really 5 specific things. First, how self-directed retirement plans work, what plan options are available if you're interested in self-direction, eligibility, restrictions, guidelines, and talk about the process of opening, funding, and completing your transactions, and finally wrap things up with a discussion on how to expand your investment options beyond CDs and stocks, which of course is why you're all here, I would imagine, and what Entrust is going to be able to facilitate for you. So what is a self-directed retirement plan? IRAs in general were created by the Employee Retirement Income Security Act of 1974, also known in the industry as ERISA for short. Basically, a self-directed retirement plan gives the individual control over their investment decisions, really broadens the opportunities beyond what's traditionally understood as the underlying investment vehicles for IRAs, stocks, bonds, and primarily mutual funds. So it really broadens your options, much wider variety of investment capabilities with a self-directed plan. So what are the options? Various types of ways you can invest in a self-directed manner. Individual retirements, of course, are probably the majority of our business, split between Roth and traditional IRAs. We also offer administration on small business accounts, simplified employee pension plans, or SEP plans for short, savings incentive match plan for employees, also known as simple IRA plans, individual K plans for also geared towards those that are self-employed. And we do also offer administration on other types of accounts, ESAs, short for Educational Savings Accounts, also known as the old education IRAs, and HSAs, Health Savings Accounts. So a lot of different ways you can invest in a self-directed manner in a tax-qualified basis. One of the most common questions that I get is really what type of IRA is best for me given my circumstances, given my income level, what am I eligible for? The two primary types of IRAs, as many of you may know, are Roth and traditional. A few distinctions between the two. Roth IRAs not only grow tax-free, but any distributions come out on a tax-free basis as well. A couple of distinctions there. You must have earned income to contribute to a Roth. There are adjusted gross income limitations, so some of the high earners, the 1%ers out there, are typically not eligible to contribute to a Roth IRA. And there is no age limitation that you traditionally find in other retirement plans. Traditional IRAs are tax deductible as opposed to Roths. Roths are just with after-tax money. You cannot deduct that on your taxes on an annual basis. However, traditional IRA, you can, depending on your, again, on your income. You can deduct all or in some cases a portion of your contribution on an annual basis. Again, you must have earned income. And the distinction as far as age here is that you must not be older than age 70 and a half to contribute to a traditional IRA. Beyond the individual retirement accounts, we do administration for various types of small business plans, as I alluded to. SEP plans, simplified employee pensions, must be at least 21 years old, have to have worked for at least 3 of the last 5 years, and received at least $550 in compensation for the previous year. Simple IRA plans, you must have received at least $5,000 in compensation for the previous year, and you cannot sponsor any other retirement plan if you are participating in a simple. And finally, small business, as far as small business plans, individual 401ks. These are really designed for sole proprietors with no employees other than a spouse or partners. Now, as far as what can be invested in with various types of retirement plans, really the options are almost limitless. Residential, commercial real estate, precious metals, limited liability corporations or private placements as they're often also known, limited partnerships, secured and unsecured loans, joint ventures, trust deeds. Really, people get very creative, and as the next slide will show, there's not a lot of limitations that the IRS put in the legislation to restrict types of investments. Really, the restrictions are threefold. First, collectibles. So any type of artwork or antiques or gems, stamps or coins, coins with a few exceptions that we can get into specific to precious metals being allowed, alcoholic beverages, things of that nature, antique cars. Really anything that would be deemed a collectible is not a permissible investment for a self-directed IRA. And beyond that, the two other restrictions are life insurance and S corporations. So just things to be aware of when you're considering what types of investments you want to move forward with. Beyond restrictions on investments, there are a few restrictions on who your IRA can do business with. Disqualified persons. Those would include your spouse, your parents, grandparents, children, grandchildren, and spouses of lineal descendants. So really the key thing to think about there is lineal family members is typically going to be a restricted individual for your IRA to do business with. Example of that, if you buy a rental property, you cannot rent to your son or daughter or your parents. However, there are some things that may be surprising as far as who you can do business with. You could actually rent that property to a brother or a sister. That's not a restriction. Acceptable types of transactions along those lines, partnering with yourself on a new deal, so you can partner with your IRA money and after-tax money. Totally permissible. Partner with your cousin or another relative, non-lineal. Partnering with your spouse on a new deal. Now, that's an important distinction. It would have to be done at the outset of the transaction, and something we can discuss offline if that's of interest to any individuals. Now, in terms of how to fund your account, there's really three options. The first two are the rollover and transfer option. Rollover, of course, would be moving money from a previous employer's plan, 401k that you may have left employment. Any type of qualified group retirement plan money like that would typically be considered a rollover. And you would take distribution from the previous custodian, and you have 60 days to move that money into another qualified plan before the IRS would see that as a distribution. Definitely something you want to take note of, because if you pass that 60-day window, typically you're going to be taxed on the entire amount. And if you're under age 59 and a half, the qualified retirement age, you're going to have a penalty as well. Transfers, transferring funds is from existing IRAs is probably the most common way accounts get funded with us. They basically would just move money, all or a portion of another IRA from another custodian directly to Entrust. And the final means to contribute, of course, would be your annual contribution that's allowed by the IRS, which for 2013 has jumped up to $5,500. Now that can be sent in to us by check or wire or ACH transfer, whatever is most convenient for you. Now, how do you get started? Really 3 steps to the entire process that I go through with all my clients. First, of course, is establishing an account. That's a pretty simple process, requires a few forms and a copy of ID for compliance with the Patriot Act. Once we get those things, we can typically have an account established for you in 2 to 3 business days. It's a very quick process. Second step is, of course, funding your account. Going back to the last slide, really a few different ways to do that. If you were transferring money from a previous employer's plan or from another IRA, that can take anywhere from a few days to a few weeks. So really the planning and timing of that is important. If you have something that is a time-sensitive investment, just be cognizant of how long it could take to actually fund your account. And third and finally, of course, purchasing your asset or making your investment. And that's a process, depending on what you are purchasing, that can go very quickly or can take a little bit of time if it's a real estate purchase, for example. Now, I've obviously gone through a good amount of things here and really haven't taken time to stop for any questions. So what I'll do at this point is open up the floor. If anybody has any questions or things that they want to go through or have me go through in a little bit more detail, please type in the chat box and I will answer those as they come in. Okay, first question I'm seeing here. I apologize, Ken, if my volume was a bit low. Hopefully everyone else was able to hear the presentation without too much problem. Question from Michael Gow. Can Roth IRAs be rolled to a solo 401k? Good question. I don't believe that a Roth IRA can be moved into a 401k. That's something we can discuss offline for your particular situation, Michael, but that's not a transaction I've seen happen before. Okay, question coming in from Keith Beasley. Can you please go through a step-by-step for purchasing property with a self-directed account? Okay. By property, I assume you mean a piece of real estate. Really, there's two different ways that can be accomplished. You can make a purchase directly from an IRA, or it can be purchased through a business entity, through an LLC or a business trust. If it's purchased directly from an IRA, you would work with our real estate department within Entrust to help facilitate the transaction. We basically will affect the purchase on behalf of your IRA, and really would work like any other traditional purchase of a property, depending on whether or not there's financing involved. That can change the situation slightly, but aside from a purchase direct from the IRA, you do have the option to purchase through a business entity, which a lot of people are doing these days, purchasing through an LLC or a business trust, in which case we would need to see that the IRA is a member of the LLC or the business trust. That's the critical thing. And we would go through the process of actually funding the LLC, and in turn the LLC would purchase the property directly and not involve the Entrust Group in the actual transaction. Okay, going through some more questions here. Is there a limit to how many IRA rollovers you can do per year? There is not a limit that I'm aware of. I'm not sure if that's referring to multiple previous employers or number of IRA rollovers that can be done into one particular account, but there are not restrictions on that. You're free to move the money as often as you'd like. Okay. The new employer and they have a 401k set up or do not have a 401k set up. Can I open my own and have automatic deductions taken from my employer? And how can I make sure use this 401k to purchase property that I want to live in? Okay. Few problems there with that question. One of the things you absolutely cannot do when you purchase property through an IRA is actually inhabit the property. That's a clear restriction and designation that the IRS has put in place on these. To the first question there, you would not be able to set up your own 401k if you're working for an employer. You could set up an individual 401k if you were self-employed. However, a 401k really by definition is a group retirement plan, and that's not something you would be able to do on your own. An IRA itself, traditional or Roth IRA, would be your best options in that case where there's not an employer-sponsored plan. Question from John Bunk, if you're over 70 and a half, can you transfer to a self-directed IRA? Absolutely. 70 and a half is really the age where you need to start taking distributions from an IRA. You certainly, when you're beyond 70 and a half, can still do business or still make investments with that money. However, you would need to start taking distributions at that point. So, just something to be aware of that that you will need to start taking money out. But as far as making future investments, you're certainly still able to do so. Question from Pamela Carlson, the annual fee for self-directed Roth with Entrust. It's really going to depend on what you're trying to do, how much it's going to cost, but our fee schedule is available on the website. I'd refer you to that. But a general rule of thumb is that it's going to cost $50 to establish an account, and for an individual purchasing one asset, the annual fee is $295 a year. Beyond that, there may be some ancillary charges if you're having us wire money or send FedExes, things like that. But those are the two bigger fees to be cognizant of. And again, I'd refer everyone to our website to take a closer look at our fee disclosure that we publish for all fees that may or may not apply. Let's see, question from Marta. I left my last employer in July 2011. Never rolled over. What happens now? How do I roll this money over, and will I pay taxes? No, it's actually very common to have money left at a previous employer. That's not a problem that you've done that. The money hopefully has continued to grow given whatever your underlying investments were. And you're free to take that out at any time once you've separated service to roll it over to an IRA. Probably best for us to have an offline conversation on how to go about doing so. But essentially, if it's money at a previous employer, you're going to need to initiate the process of a rollover with that previous employer's plan sponsor or plan provider, I should say. And of course, simultaneous to that, have an account set up at the Entrust Group in order to be able to receive that money. And as far as taxes, there should not be any taxes in doing a rollover because it's a transfer from one qualified plan to another. See, can you roll over funds from an employee-sponsored 401k? Not sure I'm completely understanding the question. All 401ks would be sponsored by an employer as opposed to an employee. By definition, a 401k is a group retirement plan that is sponsored by an employer. But if I'm understanding kind of the root of that question, yes, if you've separated service, you should be able to roll over any money to an IRA. And in some cases where you haven't separated service, there are things called in-service distribution provisions that are built into some plan documents these days, which would enable you to potentially take money out while even still employed. I just discussed the fee structure briefly. Again, I'd refer to anyone that has more specific questions on that to have a conversation with me offline. Feel free to call my office or email me, or visit our website, which does have our fee schedule available. Question from Satish. I hope I'm pronouncing that properly. Some banks do not allow investment in real estate purchase using IRA funds. Is that legal that the bank can refuse while other banks do not? Yeah, it's perfectly legal from their standpoint. IRA providers do have the ability to limit the underlying investments that they make available. For example, if you were to go to a mutual fund company and establish an IRA, they're typically only going to offer their proprietary mutual funds as the underlying investment options. It's within their right to do so. Free market, if someone doesn't like that, they obviously can take their business elsewhere. Entrust, really that's one of the unique things about us is that we don't have a proprietary underlying investment. There's no affiliation with any investment company. We're completely agnostic as far as what is invested in by the individuals as long as it's permissible by law and with the IRS. Question from Jack Tilbury, discuss forced distributions with real estate in the IRA. I'm not sure exactly what you mean by forced distributions. If you're referring to an individual that has to take what's called RMDs or required minimum distributions that begin at age 70 and a half, definitely something to be cognizant of and plan for if you're approaching that age or already beyond that age and purchasing real estate with an IRA. there's ways that you can still take money out even when you own a hard asset like a piece of property. And also RMDs can be aggregated with other IRAs that you may have. So really you're required to take X dollars out on an annual basis. So it doesn't necessarily have to force a sale of a property in order to meet that liquidity. Really depends on the individual situation, and probably best to discuss that offline as well, Jack. Okay, question from Herb. Do you have a standard custodial agreement that I can review? Yeah, sure. I mean, I'd be happy to provide you with all of our paperwork if you're interested in establishing an account. Okay, another question from Marta. What can I do instead? An IRA? And can this be automatically deducted from my payroll? Typically not, unfortunately, Marta. If your employer is not sponsoring a retirement plan, you're generally going to be limited to contributing to an IRA, to a Roth or a traditional IRA. And that is not something that we can do a payroll deduction on because we don't have access to your payroll provider. You know, there's some strategies we can discuss, maybe sending in some sort of a systematic investment or regular contribution. You know, our options to fund the IRA on an annual basis. Okay. Question from John Parsons about precious metals. Can they be included in an IRA, and particularly if you wish to store gold with our partner Gold Money? Okay. Yeah, absolutely. Precious metals are an investment that are permissible by the IRS, that the Entrust Group can facilitate if that is of interest as an underlying investment for you. We are not a precious metals dealer. We would work in partnership with a precious metals dealer of your choosing, and the money would be held at a third-party depository. The conversation on Gold Money is, you know, is one we can have offline. Gold Money is a third-party group that facilitates investments in precious metals. So, John, feel free to give me a call after the presentation, and we can discuss that. Okay. Another question from Keith Beasley. Where and how are uninvested funds held while waiting for investment decisions? Any unallocated monies or uninvested monies are held in an interest-bearing account for benefit of the individual whose account it is. So it's not money that the Entrust Group or anyone we're affiliated with can access. The money is held in trust for you. And as you can all probably imagine, in this sort of an interest rate environment, it's you know, not an extremely high-yielding account, but we are generating interest for any cash positions you may have. Let's see here. Another question from Satish. This is a very specific question to your situation. I'm gonna ask that we have an offline conversation on that as well, as we do have a large amount of people on the webinar here. So again, feel free to email or call me with questions that pertain to your specific situation, and not just Satish, but anyone who's listening as well. Okay. Do we offer non-recourse loan arrangements? Non-recourse loans are a way to effectively leverage your IRA, most often for purchase of real estate. The Entrust Group itself is not a non-recourse lender. However, we can provide a list of non-recourse lenders that we're aware of, or in some cases have done business with in the past with other clients. So that's definitely an option if someone's seeking to borrow money to use in conjunction with their IRA. Again, most typically for real estate purposes. Okay. Question from Ken Rattay: if I purchase an income-producing property, place or vest the IRA for benefit of, then collect monthly rent or lease payments, does the payer send monthly payments to you? All income goes back to the IRA tax-free, correct? Okay. Yeah, there's a lot to that question, Ken. Short answer is yes. If the IRA purchases the property directly, meaning the name on the deed is the vesting of your IRA account, then any income generated from that property would need to go back to your IRA, and in this case, would be sent back to us for a deposit into your account here. If someone were to make the purchase through a business entity, through an LLC or a business trust, that money could go directly to that business entity's bank account and could be reinvested or used to purchase another asset. Really, whatever you choose in that situation. But yes, it would continue to be a tax-deferred investment. That money would continue to grow tax-deferred. And we do produce statements for account holders as well. But again, depending on how you're holding the asset or the property in that case, how much information that statement contains is really going to be dependent on how that property is owned. Okay. Question from Herb: if real estate is already owned, say as joint tenants, can this be put into the IRA? Short answer is no. Properties that are already owned by you as an individual cannot be purchased by your IRA. That would be seen as self-dealing, and really the IRS thought there is that could lead to price manipulation or all sorts of things that they don't want to allow simply. So any real estate purchase would need to be a new purchase and not something that's an existing asset or an existing property owned by an individual. Okay. Not sure if there's any more questions. I think I've gotten to most of these. I'm sure some of you may have seen, I skipped over a few that were very specific to individual situations, and again, I'd encourage people to contact me offline so I could really gather more details about the situation as opposed to just giving a general answer that could be misconstrued or not particularly relevant if I were to find out more details about what's going on. So I didn't mean to skip over people intentionally. It's just, when there's a group of over 30 folks, I don't want to get too specific with one individual situation. So if there's no more questions, I appreciate everyone's time today. Thank you for your interest in the Entrust Group and in self-directed IRAs. Again, I'm based in Entrust's Boston, Massachusetts office. I'm the Business Development Manager here. I primarily cover New England and New York. However, I also have responsibilities for Michigan and Florida. And I'm happy to work with folks nationwide that have interest and have attended this webinar. And again, feel free to reach out to me offline, and we'll have further discussions. Question coming in from Keith just before I let everyone go here. I can make the slides available for you if you'd like to send me an email. I'm happy to forward this to you. And in addition, a replay of the webinar will be available on our website on a go-forward basis. Might take a day or two for us to post it, but there will be a replay available. And last question I see coming in from Marta. Yes, I do have an email address. It's actually right there just to the right of my picture. It's bkearney, B-K-E-A-R-N-E-Y, at theentrustgroup.com. So feel free to contact me. Thank you, everyone, for your time, and hopefully I'll speak with some of you soon. Thanks very much. Take care.
Thank you. Please stand by.